For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir, which trades on the Nasdaq under the ticker symbol PLTR, has undergone a dramatic transformation in recent years. What was once viewed by Wall Street as a niche government contractor, largely tethered to defense and intelligence services, has now emerged as one of the leading beneficiaries of the artificial intelligence revolution. The shift is not just a matter of market positioning, it reflects a deeper evolution in the company's core identity and long-term strategy. Once overlooked or misunderstood by mainstream investors, Palantir is now being recognized for its robust technological capabilities. While in the past, the company was heavily associated with its roots in military and intelligence software, the broader market is now starting to appreciate the full extent of its data integration and artificial intelligence platforms. These tools are not just valuable for governments, they are rapidly gaining traction in the commercial world as businesses seek ways to better harness their data and make smarter decisions through artificial intelligence-powered insights. This pivot toward commercial applications is already translating into significant financial returns. During the company's Q1 earnings announcement for the year 2025, Palantir reported total revenue of $884 million. This represented a robust year-over-year increase of 39%, showcasing the company's ability to grow even in an increasingly competitive artificial intelligence landscape. A major driver of this growth has been Palantir's United States commercial segment, which has shown remarkable acceleration. Specifically, Palantir's commercial operations within the United States have now reached a $1 billion run rate, representing 71% growth compared to the previous year. That figure is up from 64% growth in the prior period, highlighting not only the scale, but also the accelerating pace of expansion in this segment. One of the main catalysts behind this surge is the company's artificial intelligence platform, which has been central to winning over new clients and expanding existing contracts. The demand for this artificial intelligence platform has been particularly striking. Within the United States commercial market alone, the total contract value skyrocketed to $810 million, a staggering increase of 183% year over year. This figure is especially impressive considering the competitive environment for artificial intelligence services, which includes tech giants and numerous startups. Palantir's ability to rapidly scale its contract base points to the strength of its software and the deep trust it has built with its clients. With these strong results in hand, Palantir is not slowing down. For the second quarter of 2025, Palantir anticipates revenue to fall between $934 million and $938 million. This range reflects the company's confidence in sustained client growth and continued demand for its artificial intelligence capabilities. Looking even further out, Palantir now expects its total revenue for the full calendar year to land somewhere between $3,890 million and $3,902 million. These figures surpass the expectations of Wall Street analysts, who had been forecasting a more conservative target of approximately $3,750 million. The company's updated guidance suggests that it is consistently outperforming even the bullish estimates, thanks in large part to its rapidly expanding commercial business and the growing maturity of its artificial intelligence offerings. Despite all this positive momentum, some prominent investors remain cautious about the stock's valuation at current levels. One such voice is Victor Dergunov, a top-ranked investor known for his careful financial analysis, who is ranked among the top 4% of contributors on the investment research platform TipRanks. Dergunov has noted that while Palantir's performance and guidance are undeniably strong, the company's current valuation could limit its near-term upside potential. The company presently holds a market capitalization of $277 billion, yet its trailing 12-month revenue stands at just $2,870 million. This means the company is valued at nearly 100 times its most recent 12-month sales. Such a lofty multiple can be difficult to justify, even for high-growth technology firms, and raises questions about how much future performance is already priced into the stock. Even when projecting forward to the year 2026, under an optimistic growth scenario, Palantir's forward price-to-earnings ratio could still hover around 150 times. This is an extremely elevated level, particularly when compared to other large-cap technology companies, many of which trade at far lower multiples despite delivering consistent earnings. These high valuation metrics create a vulnerability to corrections, especially in an environment where market sentiment can shift rapidly based on broader economic or geopolitical factors. Dergunov has explained that such an ultra-high valuation could increase the likelihood of significant selling pressure, particularly if the company's performance fails to meet the market's sky-high expectations. In his analysis, a better entry point for investors might occur if the stock were to pull back to a more reasonable valuation range. Specifically, he views the $50 to $65 range as an attractive price zone for long-term buyers who are looking to gain exposure to a high-quality artificial intelligence company without overpaying. However, Dergunov remains bullish about the long-term potential of Palantir as a business. He describes it as a remarkable company with tremendous upside, especially as artificial intelligence becomes increasingly embedded in both public and private sector decision-making. Nonetheless, he maintains a neutral stance on the stock in the short term and has issued a hold rating, suggesting that while the company's fundamentals are sound, the valuation demands a cautious approach. This level of cautious optimism is reflected in the broader analyst community as well. Out of the 18 analysts currently covering Palantir, 11 have issued a hold recommendation, while only 3 have rated the stock as a buy. The remaining 4 analysts have assigned a sell rating. This breakdown leads to a consensus hold rating overall, indicating that while analysts acknowledge the company's strength and long-term prospects, they are wary of the stock's high valuation in the current environment. The average price target among these analysts stands at $98.56. Based on the stock's current trading level, this implies a potential downside of approximately 16% over the next 12 months. In other words, even though the company continues to deliver excellent results, many experts believe that the stock may already be pricing in a great deal of that success, leaving limited room for additional upside without a broader shift in market sentiment or a significant improvement in earnings. Essentially, Palantir is undeniably a major player in the artificial intelligence sector, with impressive growth, expanding commercial adoption, and a powerful software suite that is resonating across industries. However, as with any fast-growing company, investors must weigh the strong fundamentals against the risks associated with an elevated valuation. Palantir has rapidly evolved from a government-focused data firm into a leading force in the commercial artificial intelligence space, driven by surging demand for its artificial intelligence platform. In Q1 of 2025, the company reported revenue of $884 million, marking a 39% increase year over year, with its United States commercial business reaching a $1 billion run rate and contract value soaring by 183% to $810 million. Riding this momentum, Palantir raised its guidance, forecasting second quarter revenue between $934 million and $938 million and full-year revenue between $3,890 million and $3,902 million, surpassing analyst expectations. However, top investor Victor Dergunov cautions that despite strong fundamentals, Palantir's nearly 100 times trailing sales valuation and projected forward price-to-earnings ratio of 150 times make the stock vulnerable to corrections, suggesting a more attractive entry point might be in the $50 to $65 range. With a consensus hold rating from analysts and an average price target of $98.56, Palantir's long-term potential remains strong, but its current valuation warrants careful consideration. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.